Good morning, students. This is CA Vibhavadhavan. Welcome to the modules of Cost and Management Accounting. And today we'll be doing unit and batch costing. So I hope you must have revised and you must have, gone through all the units you have done before. Because Cost and Management Accounting, whatever units you do, the concepts are carried forward. So it's always better that you should revise the basic concepts of cost, which has been covered in the previous units, to have a better understanding of whatever module we'll be doing. All right. So unit and batch costing will be starting. Good morning, all of you. Ishan, this is a session of unit and batch costing, but in case you have any doubts, you can always post your queries to, I think, the institute. And today we'll be taking care of unit and batch costing. All right. So let's start unit costing. So what is unit? Unit is per unit. All right. One piece. So unit costing is that method of costing where the output produced is identical and each unit of output requires identical cost. So whatever outputs are being produced or manufactured, they are all identical. So that identical means they are same. So what does that mean? That means one cost unit can be used for all the products. So if one unit of cost can be used or one cost per unit can be used for all the products because all are identical, all use the same cost, all use the same process. So the unit cost can be applicable to it. If let us say the products are not identical, every product is different, then you cannot apply unit costing. So unit costing means one cost per unit will be applicable to all the products which are manufactured. Clear? This method of costing is followed by industries which produce single or output of few variants of a single output. So only one product is generally produced and repetitive products are being produced of that particular product only. Clear? So if a company is manufacturing only a single product, and it is keep on manufacturing the same process of manufacture, continuous, it's a repetitive exercise, then unit costing can be applicable. Under this method, costs are collected, analyzed, element-wise. Element means direct material, direct labor, direct expenses. These are elements of cost. So costs are collected element-wise. Material cost separately, labor cost, like we used to do and we do in costing. You must have studied the cost sheet. So all the elements of cost we have to take into consideration. Then we calculate the total cost per unit, and how it is calculated. Total cost of production divided by total number of units produced. So total cost divided by total units of production. You will get cost per unit. And this cost per unit will be applicable for all the products, whatever the repetitive production. A single product, but all the units of that product. This method of costing therefore finds its application in industries like paper, cement, steel works, etc., etc. So all the products, all the units of a product will be identical. So if there are 1,000 units produced of a particular kind of paper, let us say a chart paper, so 1,000 units of the same chart paper are being produced. So same cost per unit will be applicable. So each chart paper will be, for example, it is 5 rupees per chart paper. So that 5 rupees will be the cost for every chart paper, whether you produce 100 chart papers or 1,000 or 1 lakh, because all the chart papers are identical. All right. So when the products, all the units of the products, all the units of one product are identical, then unit costing is used. Moving further. So we have this illustration. We have a lot of illustrations today. See, unit and batch costing is not a separate concept as such. It is one method of costing. Okay, so you have to apply the concept. So unit and batch costing is a very good way to apply the concepts which you have learned so far. So the element wise you have to apply how we calculate the cost per unit. So here we know how we accumulate the cost since we have done material, labor, overheads, clear, and cost sheet. By now you should be thorough with material, labor, overheads, and cost sheet. And then all these concepts which you have understood in these units will be applied here now. So it is more of application of the concepts, not a, as of now, not a new concept, but an application of what all you have studied so far. All right. So that is a good exercise in how we actually compute cost per unit. So just take a note of this illustration. Good morning, students. So a lot of students have joined. Students, let us just concentrate on unit and batch costing. If you have any queries in any topic, I think you can always mail to the institute for the queries. In the live session, we have to cover just the topic for which the session is being scheduled. All right. So today we'll just do unit and batch costing, and somewhere, if some concepts are there interrelated, then of course we can discuss. So this you have the information: raw material consumed, then direct wages, machine hours worked, machine hour rate, office overheads, selling overheads, unit produced and sold. See, you have to find out the cost per unit. Clear? Okay. So we have raw material, we have direct wages, machine hours worked. Can you find something here, machine hours work? That means it's talking about overheads. By now you must have done overheads. Overheads are always absorbed on some base or some rate or some parameter. Here, overheads are absorbed on the basis of machine hours. All right. So office overheads and selling overheads. So we'll start with, see, all the elements of cost are there: material, wages. You just have to be thorough with the cost sheet format to understand any question. Here, so raw material is 4 lakh. So I'm just writing it over here. Raw material 4 lakh. Direct wages is 2,40,000. Direct wages 2,40,000. So we have the prime cost with us. Clear? So prime cost is 6,40,000. I'm just giving you an idea how we do it. So you just have to basically frame the cost sheet as much as it is given in the question. Clear? To the prime cost, what we do? Can anybody give me the answer to the prime cost? What we do? To the prime cost, what we add? Come on. This is the way we'll revise the cost sheet also. To the prime cost, what we add, students? Yes, overhead. So we have to add which overhead? You should know. You should have factory overhead. So what are the other terms of factory overhead? Factory overhead, manufacturing overhead, production overhead, or works overhead. So there are 4 terms for factory overhead. So factory overhead, 3,200 hours and 40 hour per rate. So factory overhead will be absorbed on the basis of machine hour rate. I'm repeating, factory overhead will be absorbed on the basis of machine hour rate. So 3,200 into 40. Can I have the answers? 3,200 into 40, 1,28,000. Okay, so 1,28,000 is the factory overheads. Then you have to have the works cost. It will give you the works cost. Factory overhead, it will give you the works cost. 7,68,000 is your works cost. Students, you have to calculate per unit also. See, you have to find out cost per unit and profit. Clear? So this is the total, and you have to find out cost per unit also side by side. Here, cost per unit. How many units? 10,000 units are there. There are no stocks. So 10,000 units are there. You have to calculate cost per unit also simultaneously. Here, yes, factory overheads you add. Very good. Factory overheads, you will get works cost. Calculate cost per unit also. How you calculate cost per unit? 4 lakh is the material cost divided by 10,000 units. 40 is the material cost. Total units are 10,000. So calculate cost per unit also. Actually, you have to find out cost per unit. How we can find out cost per unit? Cost divided by units. So raw material cost you have divided by units, 10,000. Direct wages, 2,40,000 divided by 10,000, 24. Here, then prime cost, 6,40,000 divided by 10,000, 64. Just continue this. Factory overheads are absorbed. Suraj, you should have the basic understanding of cost sheet and overheads before you do any further question. All right. Overheads are always absorbed. 3,200 into 40 are factory overheads. Machine hours. Machine hour means factory. It's a factory cost. So machine hours. Machine hours worked into machine hour rate. Okay, after works cost, what we add? After works cost, we will add office overheads. Clear? 10% of works cost is office overhead. Keep on calculating cost per unit also. Office overheads 10% of works cost. Works cost is 7,68,000. So 76,800 is your office overheads. 7,68,000 plus 76,800. 8,44,800. 8,44,800. Keep on dividing by 10,000. 1,28,000 divided by 10,000. Keep on calculating. It's 12.8. 7,68,000 divided by 10,000. So 76.80. Keep on calculating cost per unit also. WIP, who's this? Mayur. Mayur, there is no opening and closing stock of WIP. Okay. So if there is no opening and closing stock of WIP, you can ignore, or you can write it also and write nil against it. So 10,000, it's given units produced and sold. So there are no closing and opening stocks here. No WIP stocks, no finished goods stocks, no raw material stock. It's directly given consumed. All right. Add office overheads. So cost of production or cost of goods sold. Then you have to add selling overheads 20 per unit. Selling overheads 20 per unit. So how much are the selling overheads? 10,000 into 20. 2 lakh is selling overheads. Add selling overheads. Add selling overheads 2 lakh. So 10 lakh 44,800 cost of sales. 10 lakh 44,800 cost of sales. Keep on calculating cost per unit also. Keep on dividing by 10,000 units. How you calculate cost per unit? Cost divided by units. You have all the cost with you. Raw material cost, labor cost, overheads cost. So keep on dividing by 10,000 each and every element of cost, and you will be getting cost per unit. Clear? So keep on adding. Then you have the sales, cost of sales. You add the profit. You don't know the profit, but you know the sales. You don't know the profit, but you know the sales. Sales is 12 lakh. And of course, 120 per unit. So the balance is, how much is the profit? Can anybody tell the profit? Can anybody tell profit? Sales is given. Cost of sales we have calculated. So I'm just repeating the whole story. Raw material plus direct wages, we get prime cost. There is no direct expense here. To the prime cost, we have added factory overheads. How we calculated factory overheads? Machine hours worked into machine hour rate. That means factory overheads will be absorbed on the basis of machine hours. When we add factory overheads to prime cost, we get works cost. There are no opening and closing stock of works overhead, so we have ignored it. Then add office overhead 76,800. 10% of works cost is office overhead. We have got cost of production. There is no opening and closing stock of finished goods, so cost of production is also cost of goods sold. To the cost of goods sold, we have added selling overheads at 20 per unit. We got the cost of sales. We had the sales with us. So what is the profit? Yes, 155,200 is the profit. Keep on dividing by 10,000 units, you will get cost per unit also. Can I get total cost per unit? Can I get total cost per unit? It's 10,44,800 divided by 10,000. 104.48 is your cost per unit. Cost per unit, and profit is 1,55,200. So this is the way we do. It's not a separate concept. It's the application of whatever you have done, different elements of cost, material, labor, overheads, how we actually absorb the overheads, then how we calculate the total cost. Through that, we calculate cost per unit, and yes, the profit. All right. So it's a basic fundamental question, a warm-up question, so that you just, go through and revise and brush up your knowledge of the basics. Okay. So this is the profit. Yes. And the cost per unit is 104.48. So I hope you must have understood this question, and profit is 155,200. So we have this a fair answer. You can just take a note of this answer. So this is the fair answer. You can just have a note, raw material consumed. So this is the prime cost. Then this is the works cost, the second landmark. Cost of production and cost of goods sold, both will be same because there is no opening and closing stock of finished goods. Then you have total cost or cost of sales. Sales was given to us, so this is your profit and this is your cost per unit. So keep on dividing on top of it. You must always write number of units produced. You must write always. Clear? So this will give you an idea. You have to divide by which units. Clear? So I hope you must have understood this illustration. Shall we move further? Any doubts so far? 15.52 per unit cost. No, it's 104.48. Rashmi, you just rework your solution. Okay, profit per unit. Profit per unit is 15.52, but the question is telling us to calculate cost per unit and total profit. But let's move on. Okay, we have another illustration. So just take a note of this illustration, students. Good. I'm glad you've understood. Take the note of this illustration. Again, a very good illustration to understand the elements of cost, material, labor, overheads. Okay, so it's a company where a uniform type of product. So uniform type of product means unit costing. So uniform means same identical type of product is being produced. So all units of a product will be same. Clear? Manufacturing capacity of 3,000 units per week of 48 hours. From the records, the following data are available relating to output and cost of 3 consecutive weeks. Consecutive means one after another. So week 1, week 2, and week 3. So we have the units manufactured. We have the direct material, direct wages, and factory overhead. So on the basis of this information, we have to calculate, assuming that the company charges a profit of 20% on selling price. Yeah, you should note these things. Charges a profit of 20% on selling price. Find out the selling price per unit when the weekly output is 2,000 units. So we have the elements of cost. We have to calculate the selling price per unit when the weekly output is 2,000 units. Clear? Okay. So now how we have to calculate? So we have to calculate for 2,000 units. Okay. Now, when the elements of cost are there with different combinations of units. So number 1, we have week number 1, 1,200 units, week number 2, 1,600, and week number 3, 1,800. When the capacity is 3,000, so the capacity is underutilized. So for 2,000 units, we have to, whenever students, such type of questions are there, you should always find out which is the variable cost and which is the semi-variable cost, which are the fixed costs. Only then you will be actually calculating such questions here. So direct material, direct wages, direct expenses, what we call as prime cost. is always variable. Clear? So direct material, direct wages are always variable. Variable means they always change in same proportion to the output. So direct material 9,000, units manufactured 1,200. So how much is the unit? 9,000 divided by 1,200. 9,000 divided by 1,200, it's 7.5. 12,000 divided by 1,600. Okay, so you have to calculate whether the direct material is a variable cost or not. Only then the same rate will be applicable for 2,000 units. We have to calculate the profit and the selling price for 2,000 units on the basis of information given for these 3 weeks. Clear? So 9,000 divided by 1,200. How much is the material cost per unit? 7.5. 12,000 divided by 1,600. It comes to 7.5. 13,500 divided by 1,800. It comes to 7.5. Just check, calculate on your own, and then only you will come to know. So 7.5. That means if the cost per unit is constant, and in total it changes, it is always a variable cost. I hope you know this. I'm just making it over here. Total cost and cost per unit. Okay. Variable cost and fixed cost. Variable cost, total cost always changes. Total variable cost always changes with the output. You change the output, the total variable cost per change. But variable cost per unit remains constant. For example, 7.5. You produce whatever units, the per unit variable cost will be 7.5. Here, so variable costs are direct material, direct labor, direct expenses. They are always variable plus variable overheads. So variable cost will always be per unit, will always be constant. Fixed cost, total cost generally is constant. Okay, and cost per unit changes. So this is a very, very important fundamental you have to understand. Variable cost in total always changes and per unit remains constant. Fixed cost in total remains constant generally in the short run, and per unit it always changes. Clear? So this is a very important fundamental to understand and to remember. So variable, direct material cost, direct wages, total, they both are variable. And how to find that they are variable? So you calculate the per unit direct material cost. It's same in all the 3 options. Similarly, for direct wages, 3,600 is the direct wages cost divided by 1,200. How much is direct wages cost? 3,600 divided by 1,200. It comes to 3. 4,800 divided by 1,600. It comes to 3. 5,400 divided by 1,800. Cost divided by units, it comes to 3. So whenever per unit cost is same, that means it's a variable cost. So direct material, direct wages are variable. So let us apply this to 2,000 units also. Direct material, 7.5 per unit, whatever units you produce. So 7.5 into 2,000 comes to 15,000. Direct material comes to 15,000. 7.5 is the rate and 2,000 are the units. So 15,000 is direct material. Then come to direct labor, 3 per unit. So 6,000 is your direct labor. 3 per unit, 6,000 is your direct labor. Clear? So first of all, the first step is to find out which is the variable cost and which is the fixed or semi-variable cost. Clear? So material and wages are always 100% variable. Direct material and direct labor. Clear? Okay. So then coming to factory overheads. Factory overheads. Are factory overheads variable? Let us see. I'm just clearing the rest so that we have the space to make you understand. Okay. Now, factory overheads, are these variable? Let us see. 31,000 divided by 1,200. The units, 31,000 divided by 1,200. It's 25.83. Let's move to second one. 33,000 divided by 1,600. Cost divided by units is 20.62. Let's move to the third one. 34,000 divided by 1,800. It's 18.88. So cost per unit, the factory overhead per unit is changing every time. That means, and the amount is also not same. So that means factory overheads are semi-variable. What do you understand by semi-variable? Why they are not variable? Because cost per unit is different every time. Here it's 25.8, here is 20 point something, here is 18.88 something. So cost per unit is also not same and total also is not same. 31, 33, 34. So it cannot be variable, it cannot be fixed. How you have to identify? This is the way. Had it been variable cost, factory overheads, the per unit has to be same. Had it been fixed, the amount should be same. So neither the per unit is same, constant, nor the amount is same. That means it is a semi-variable cost. Factory overheads are semi-variable. So we have to split the factory overhead into fixed and variable. How we do it? We have done it in the introduction part. How to split the factory overheads? Clear? So how we do it? Okay. So any semi-variable, how we split? Semi-variable, how we split? Change difference of amount divided by difference of units. Clear? So you can take any of the two. So we are taking difference in amount and difference in units. I'm erasing first of all. And difference in units. So difference in amount is 2,000 and difference in units are 400. Students, this is the way we are calculating variable cost per unit. Clear? So we are splitting the variable cost into variable and fixed. So this way we will be getting the variable cost per unit. So 2,000 divided by 400. 2,000 difference in amount of these two, 31 and 33. And difference in units of quantity is 400. So 2,000 divided by 400, 5 per unit. And if it is coming 5 per unit, it's variable or fixed? What we have calculated? We have calculated 5 per unit. So is it the variable portion of semi-variable or fixed portion? It has to be variable. So through this exercise, we have found the variable part of it. 5 per unit. Variable cost will always denoted by in per unit. Clear? So variable cost per unit is 5. So now if the variable cost per unit is 5, so variable 5 means 2,000 into 5, 2,000 units and 5 per unit. Clear? So variable part is 10,000. So out of it's 5 per unit. Clear? And what we have to calculate? We have to calculate for. So let us calculate for this first. Variable cost 5 per unit. Units are 1,200. So 1,200 into 5. 1,200 into 5 is 6,000. So this is the variable portion. And our balance is 31,000. So 25,000 has to be fixed cost. 25,000 has to be fixed cost. Let me explain you again so that you understand it better. Students, we have found 5 per unit. This is the variable portion in the semi-variable. Clear? So the units in the first case were 1,200 units. So 1,200 into 5 was 6,000. That is variable cost. Total semi-variable is 31,000. So that means the balance 25,000 is fixed cost. So variable cost and fixed cost. And this was semi-variable. Clear? So let us do the exercise for the second one also. For 1,600. 1,600 into 5. 1,600 into 5 comes to 8,000. 1,600 into 5 comes to 8,000. So 8,000 is variable cost minus 33,000. Fixed cost comes to 25,000. So basically, fixed cost is 25,000. You calculate for any of the three options, it will come to 25,000 only. Variable cost per unit remains same and fixed cost total remains same. Clear? So here also, if we apply to 2000 units, variable cost is 5 per unit into 2, 10,000 is variable and fixed has to be 25,000. So total cost is 35,000 here. Clear? Variable cost is 5 per unit. So 5 into 2, 10,000 and fixed cost is 25,000. You check in all the three alternatives, it will come to be 25,000. All right. So this is the total cost we have calculated. Yes, 5 variable cost and fixed cost will be the balance here. So students, this exercise is to calculate variable cost per unit. Variable cost per unit. So through this, difference of amount divided by difference of quantity will give you variable cost per unit. You just calculate the variable cost, 1200 units we had, into 5 per unit. This was 1200 units into 5 per unit. So 6,000 was variable cost out of 31,000 and the balance is fixed cost. You can try this for this in the second case also. Second case, the second week units are 1600. So let us try for this also. So I'm just erasing it off. Let us try for the second case also. So 1600 into 5, it's 8,000. So variable cost is 8,000. Total cost in the second week is 33,000. So 33,000 in the second week is the total semi-variable. 8,000 comes to variable. So 25,000 comes for fixed cost here. So you can do it for any of these 3 weeks. Variable cost calculate by through 5 per unit. The balance has to be fixed cost. So in all the 3 alternatives, fixed cost will come to be 25,000. Clear? So here also fixed cost will be 25,000. Here also fixed cost 25,000. Here also fixed cost 25,000. And the variable cost per unit is 5 per unit. Clear? So we have applied exactly on 2000 units also. Variable cost 5 per unit and fixed cost is 25,000. So can anybody tell me the total cost, please? Total cost. So total cost, keep on calculating the per unit also. It's always better to calculate per unit also. So total cost, can anybody tell me the total cost? Can anybody tell me the total cost, please? Variable cost is not 9,000, Mayur. Variable cost is 10,000. 5 per unit. 9,000 is for what 9,000? You must have done for the third week. How much is total cost? Okay, 56,000 is the total cost. I'm getting this answer. And 28 is per unit. Okay, so 56,000 and 28. It is the total cost. Keep on calculating the per unit also. Okay, so now profit is 20% on the selling price. 20% on the selling price. Add profit. I'm erasing this off. The last part I'm just erasing to give you space so that I can write. Okay, profit is 20% on selling price. Can anybody tell a profit at the rate of 20% on selling price, and selling price is not given to you. So sales and this is per unit. So let us say how much selling price per unit comes. Can anybody tell the profit? 56,000 is the total cost and profit is 20% on sales. Clear? And sales is not given. Can anybody tell me the profit? Anybody calculated the profit? Okay, Mayur, that's okay. That's for third week. Why 5? Mahesh, what 5? We have explained you the entire story, how we have calculated 5 per unit, and now you are asking why 5? You please just go through the presentation again, you will understand. Okay, how you have calculated profit? 5 into 1600? Because 5 per unit, we have calculated the variable cost. It will apply to all the weeks. Mahesh, I think you should concentrate. Otherwise, you will not understand. We have calculated 5 variable cost per unit and it applies to all the 3 weeks. Into 5, into 5, into 5. Clear? Because variable cost per unit remains constant. So it has to be constant for all any number of units. Okay, so profit comes to 14,000. Let us see how it comes. 56,000 is your cost. So 56,000 is the cost. And you have to calculate profit on sale. So how you calculate in such scenario? 56,000 into 20 by 80. Because if 20% is profit, so 80% has to be cost. Clear? So this should align. So 56,000 cost must be 80%. So we can calculate 56,000 into 20 by 80 into 20 divided by 80. Profit will be 14,000. Yeah. So this will be 70,000. Sales is 70,000 divided by 2,000. Yes. So 25% on cost. All right. So selling price per unit is 35 and that is your answer. So you have to calculate the selling price per unit, which comes to 35 per unit. All right. How we calculated the profit? We have calculated the profit on cost. Profit is given on sales, but we have to convert it on cost. So 56,000 into 20 by 80, because 80% is the cost. Or you can say, if 20% on selling price, 25% on cost. How 25%? 1 by 4 or 25%. Clear? So just take note of this. I hope you have understood. Separately fixed in cost statement. Yes, of course, we have to split the semi-variable into variable and fixed. We have to show it. Clear? Fixed cost we have to show. Okay, so I'm just have a look at the fair answer. So direct material, again, see, every time you have to calculate cost per unit, every time. And on top of it, you must write the units always. Yeah. So we have the total cost and we have the cost per unit also. So total cost and cost per unit was variable and 25,000 was fixed. You can show it separately also, variable and fixed. Clear? So 25,000 is fixed. And variable was 2,000 into 5 per unit, which we have calculated. 5 per unit, we calculated the variable portion in semi-variable. And so 2,000 into 5 and 25,000 was the fixed cost. Total cost, so 20% of sales is equivalent to 25% of cost. You get the profits, 14,000, sales is 70,000 and selling price is 35 per unit. Yeah, so I hope you must have understood. Any doubts in this question? Just take a fair note of this question. You can split the factory overheads into variable and fixed because we have split them. All right. Okay, so this was the whole working which I just explained you. So the semi-variable was split. So this was the semi-variable. This was the semi-variable and this also was semi-variable. So the difference in the amount and the difference in the cost. So 5 per unit is your variable cost per unit. We always calculate variable cost per unit. So 1,200 into 5 was your variable cost. 1,600 into 5 again was variable cost and rest was fixed cost. So fixed cost in both the cases came to 25,000. Here. So this was the variable cost. 6,000 minus 31,000, 25,000, 8,000 minus 33,000, 25,000. So this was the fixed cost. So we have split the semi-variable into variable and fixed. So this the whole story I just explained you. I hope there should be no doubts in this question. All right. Let's move on to the next slide. Okay, so we have another illustration. A very, very important illustration. Please take a note of this illustration, all of you. Just take a note of this illustration, students. All right. So this company has a capacity of 1,20,000 units per annum. Per annum means in the whole year at its optimum capacity. So this is the maximum capacity you can see. The production cost, material, direct material per unit. Direct material is always variable. So it's given in per unit. Direct labor, always variable. Overheads, fixed they have given and variable they have given, right? Semi-variable also it's given. So all the elements of cost are given in this question. Semi-variable 20 lakh per annum up to 50% capacity, and then extra amount of 4 lakh for every 25% increase in capacity or part thereof. This is very important. The production is made to order and not for stocks. That means there are no stocks. Clear? Because the production is made just to order. I just explained, Samyakanta, that in factory overheads, you can show variable and fixed separately. You can show. Clear? So it's not you have to show in total. You can show the, the difference between variable and fixed. You can show them separately and the factory overheads. That's not an issue. If the production program of the factories are indicated, the management desires a profit of 20 lakh for the year. Determine the average selling price. You have to calculate average selling price at which each unit should be quoted. So you have to calculate selling price. So selling price means we should have the total cost, we should have the profit, and then the sales. Clear? So cost per unit, profit per unit, moving to the sales per unit. So if we have to calculate till selling price, that means we should have the total cost, then the profit up to the sales. So entire, again, all the elements of cost we have to see. Ignore administration, selling and distribution. So 3 overheads are not there, but factory overheads are there. Clear? So now, this is the important information. First 3 months, 50% capacity, remaining 9 months, 80% capacity. Clear? So this is the capacity of per annum. I'm just writing it over here. I think I can make it over here. So 3 months, first 3 months, and then 9 months. Okay. First 3 months and 9 months. So 3 months capacity is 50%. And 9 months capacity is 80%. Clear? So can you tell me the capacity or the units? Can you tell me the capacity or units for first 3 months and then 9 months? In absorption mindset means, but presentation not accounting. I don't understand your question, Rajesh. Rajesh, I don't understand what you're asking. You just elaborate your question. Focusing on the question, can anybody tell me the units, the capacity for first 3 months and then 9 months? So first 3 months, we are working at 50% capacity, and then remaining 9 months, we are working at 80% capacity. Can you tell me the units? We should have the units first, and then only we have to proceed with the costing. So we have to have the units first. So please tell me the units for first 3 months, please. First 3 months at 50% capacity, how much should be the unit, production units for first 3 months at 50% capacity? Any answers? $60,000 and $90,000, 60,000 and 90,000, 15,000. Different answers I'm getting. First 3 months, 50%. Next 9 months, 80%. I want the units of production. Production units for first 3 months. 1,20,000 units per annum. 1,20,000 units per annum. Is it 60,000 or 96,000 or 15,000? 60,000. Vishali also telling 60,000. Any other answers, or should I take 60,000? 15,000 is also coming. 15,000 and 60,000. I want a couple of more students to calculate. Okay, students, now this is the point, just the start of the question. And if you calculate wrong units, the entire question will be wrong. The entire question will be wrong. Clear? Now, 60,000, 90,000, lots of queries are coming. 60,000 and 90,000, 72,000. Students, now 1,20,000 is the units per annum. Clear? So first you have to split for 3 months and then 9 months. So 1,20,000, you can't directly do 50%. It's per annum. Clear? So first of all, you have to split it between pro rata for 3 months and 9 months. 1,20,000 into 3 divided by 12. 30,000 for first 3 months and 90,000 for the next 9 months. Then do 50% and then do 80%. Clear? So it has to be 15,000 and 72,000 and not 60,000 and 96,000. So those who have done 15,000 and 72,000, that's a very, very good answer you have calculated. That is the understanding. Students, you have to be very, very careful. See, the first step to calculate the number of units. If you have done 60,000 and 96,000, your entire question will be wrong. Clear? So you have to be very careful. 1,20,000 units per annum. If it's per annum, first split for 3 months and 9 months. Then after doing 3 months and 9 months, then do 50% capacity and 80% capacity respectively. So it has to be 15,000 and 72,000. So 50% of 30,000. And what is 30,000? The capacity for first 3 months. Because 1,20,000 is for per annum. Clear? So if you are doing 50% of 120 and 80% of 120, it will be wrong. All right. I hope you have understood this. Clear? So since we have done now the units, now we can start with the costing. All right. So I'm just erasing it off. So I hope you have understood how 15 and 72 have come to all the students who have just calculated 60 and 72. So these are the units we have now. First of all, direct material. 90 per unit. It's 90 per unit. Okay. So direct material at the rate of 90 per unit. Please calculate direct material. 15,000. So it's 90 into 15,000. It's 13,50,000 direct material. And labor, 64,80,000 is your direct material for 72,000. Then come to direct labor at the rate of 60 per unit. So calculate direct labor, please. Can I have the figures for direct labor? Okay, Bhumika, that's you have calculated 15,000. So I think figures for direct labor. It's 60 per unit. Since I'm not getting the answer, so I'm calculating. 9 lakh is direct labor. And 72,000. It's 43,20,000. 43,20,000. So calculate prime cost. Yes. Calculate prime cost. Or we can add directly the overheads also. Okay, so here prime cost, add overheads. Rajesh, your query, that's okay, absorption costing. We don't show the split between fixed and variable. But if in the question it is mentioned fixed factory overhead, variable factory overhead, you can show. See, in absorption and marginal, what you are trying to ask is, in marginal, we show fixed separately and variable altogether separately. All right. Variable, we show it in before, and fixed, we show it after contribution. That's total different treatment. In absorption, we are just writing fixed and variable separately, but under factory overheads only. You try to understand the difference. If I'm making you write fixed and variable separately, that does not mean that I am actually contradicting absorption costing. Like, see in this question also. In this question also, overheads, fixed and variable are given as separately. So what's the problem in writing them separately? It will not contradict with your absorption costing. I hope you understand this. What you are asking is marginal costing, we do fixed and variable separately. Why we are doing fixed and variable separately in absorption? This is not, we have got the fixed and variable, that discrimination in the question itself. So here if I'm writing overheads, I have to write fixed here and variable here. Here I will not do the total and write total overheads. Are you getting this? So I think this question will explain your answer. Here also overheads, we have to show fixed and variable separately. That does not mean that I'm contradicting absorption costing. Is it clear? So you have to do the question according to what is the requirement in specific question. Here also we have to show fixed and variable different. But that does not mean we are not following absorption costing. All right. So I hope that explains your answer. So now let us calculate the overheads. Fixed overheads. Prime, can anybody tell me the answer for prime cost? 13,50,000 plus 9 lakh. So prime cost is 22,50,000. You can skip prime cost also. You can directly add overheads also. That's also fine. Yeah? But there is no harm in calculating prime cost also. 64,80,000 plus 43,20,000. Okay. So now add fixed overheads, 30 lakh per annum. Can anybody tell me the fixed overheads for 3 months and 9 months respectively? Very good. So 30 lakh fixed overheads. So that means fixed are time based. I'm repeating. Fixed overheads or fixed cost is always which is related to time and not to output. Clear? So fixed overheads of 30 lakh per annum has nothing to do with the output of 15,000 or 72,000. It has to do with time. It has to do with the year, the period, the months. Clear? So 30 lakh per annum split between 3 months and 9 months. All right. I'm repeating. Fixed overheads are based on time and not output. It's not related to output. It will not change as per output. It will change as per time. Clear? So fixed overheads 30 lakh per annum split between 3 months and 9 months. Fixed will remain fixed. So take the fixed cost for 3 months and take the fixed cost for 9 months. So fixed cost for 3 months out of 30 lakh comes to, okay, 7,50,000 is the fixed overheads. And for 9 months, it will be 22,50,000. So 7,50,000 for first 3 months and 22,50,000 for the next 9 months. So that is the fixed overheads for you. Clear? See, in here also in overheads, I'm showing fixed and variable separately. So that does not mean I'm not following absorption costing. All right. I'm glad you have understood, Rajesh. For first 3 months, the fixed cost is always related to time. Now coming to variable, 100 per unit variable. See, variable cost is most of the time it has to be given in per unit. So variable cost 100 per unit. So I think we have the units for first 3 months, 15,000. So variable cost will be 15 lakh. Variable overheads will be 15 lakh and variable overheads will be 7 lakh 20,000. It's 100 per unit. Sorry, it has to be 72 lakh. It has to be 72 lakh. So 15 lakh and 72 lakh variable overheads. So under overheads, there are fixed overheads which are proportionately taken as per time. See, fixed we have taken for 3 months and 9 months. And variable we have taken for 15,000 units and 72,000 units. Students, can you understand the fixed and variable? The base, for fixed, the base is time. For variable, the base is output, the units. The variable cost changes with output. Fixed cost does not change with output. It has to be done. So I hope you've understood this. Okay, so overheads are there, fixed and variable overheads are there. Now let's come to semi-variable. Let's understand semi-variable now. I'm erasing everything else so that we have the space for this. Okay. Semi-variable now. So add semi-variable, semi-variable. To 20 lakh per annum up to 50% capacity. And an extra amount of 4 lakh for every 25% increase in capacity or part thereof. All right. So 4 lakh, 20 lakh per annum up to 50% capacity. 20 lakh per annum up to 50% capacity. And in the first case, we have 50% capacity only. Can you tell me semi-variable for first 3 months at 50% capacity? Can you tell me semi-variable for 50% capacity? How much should be the semi-variable for first 3 months? That is 50% capacity. Any answers? Okay, let us wait for more answers. Semi-variable. 5 lakh. All right, let us understand how this is done. See, 20 lakh it's per annum. All right, but per annum. So for 3 months and for 9 months. Clear? So 3 months we have 50% capacity and for 9 months we have 80% capacity. Clear? So 20 lakh per annum for 50% capacity for 3 months. So 20 lakh into 3 divided by 12 comes to 5 lakh. Clear? So semi-variable under first case will be only 5 lakh because 20 lakh per annum up to 50% capacity is 20 lakh per annum. So how much is for 3 months? 5 lakh. So 5 lakh will be the semi-variable portion in the first case. Let us see for the second case. The capacity is 80%. All right. So how much will be applicable? 20 lakh will be applicable for 50%. Clear? For extra 25%, it's 4 lakh. That means 25% is 4 lakh more. So 24 lakh. Clear? And also 4 lakh for part thereof. Clear? So our capacity is 80%. So 25 plus 25 plus 5% comes to 80%. So they are saying there will be 4% increase for every 25% or part thereof. So there's extra 5% also. You have to charge 4 lakh extra. It's or part thereof. 4 lakh for every 25% or part thereof. So had it been 26% also, for example, see up to 50%, it's 20 lakh. Clear? For next 25%, it's 4 lakh. So up to 75%, it will be 24 lakh. Clear? Now, if the percent is 77%, that means for next 2% of excess, it has to be 4 lakh for every 25 or part thereof. So even it is 1% beyond 75, you have to charge 4 lakh extra. So the total will be 28 lakh per annum for 80% capacity. per annum. So 28 lakh into 9 divided by 12, it will be into 9 divided by 12, it will be 21 lakh. Here, so this has to be the semi-variable for 80%, 21 lakh rupees. Yes. So I hope you've understood. For 80%, it is very, very important. For first 50%, it's 20 lakh. For next 25%, it's 4 lakh. For next 5%, again, it will be 4 lakh because it is written 4 lakh for every 25% increase or part thereof. So even if 1% excess, you have to charge 4 lakh because it's per annum. Clear? So it's 28 lakh for the per annum. You just do it for 9 divided by 12. It will be 21 lakh for 80% capacity. All right. So I hope students, you have understood this. It has to be 21 lakh. What is 80,000? I don't understand this. So semi-variable will be 5 lakh and 21 lakh. I hope students, you have understood. Any doubt in semi-variable? So for 50% capacity, the semi-variable applicable were 20 lakh. Till to 50% was 20, but it was 20 lakh per annum. So we calculated for 3 months, which comes to 5 lakh. For 80%, the semi-variable cost applicable was 28 lakh. 20 lakh for 50%, 4 lakh for next 25, and 4 lakh for next 5% because the total percent is 80%. So 28 lakh per annum we have taken for 9 months, which has come to 21 lakh. So this is our total cost. There is ignore administration, selling and distribution. So there is no administration, selling and distribution. They are only factory overheads, and factory overheads have 3 parameters: fixed factory, variable factory, and semi-variable factory. And again, for some students, those who have doubt, just showing them separately does not mean that we are not following absorption costing. Clear? We are taking all the 3 together, just a breakup. That's it. Clear? So 3 overheads we have taken. So that will give us the total cost. So please calculate the total cost so that we calculate the profit. Students, I hope you are doing the units also. Clear? So total units, how much are the total units? Please calculate total cost. Calculate total cost, please. Total cost for 50%. Okay, very good. Mayur has calculated for first 3 months, the total cost is 50 lakhs. The total cost is 50 lakhs. And for the 9 months, 2 crore 23 lakh 50,000 is for 9 months. Clear? So total cost will be 2 crore 73 lakh 50,000 is the total cost. So total cost of 3 plus 9 months. Clear? 2 crore 73 lakh 50,000 is the total cost divided by, we have to calculate average selling price. So total cost is there. You have to add the profit also. What should be the selling price we have to quote? Profit we have, I'm just erasing the extra thing so that we have space. I'm not erasing now this. So this is the total cost. Add profit. How much is the desired profit they're asking? 20 lakhs, they want the profit out of it. So 20 lakh is the profit they want out of it. We have the total cost, we have the profit. 2 crore 93 lakh 50,000 is the total sales. Clear? Is the total sales. We have to calculate the average selling price. I'm erasing everything else. Divided by average selling price. Now the total units, we have the total sales 2,93,000. 2 crore 93 lakh 50,000 is the total sales divided by total units. 15,000 plus 72,000. Total units are 87,000.
Total units are 87,000. 15,000 plus 72,000, the total units. So 87,000 are the total units. Please calculate average selling price. Your final move to the answer. Okay, it's 337.35. Some students have calculated. This is your final answer. Student, the most important step in this question was the first step where you have to calculate the total units. It's a very good question. Must revise this question before your exams. It clears the concept of semi-variable. This is actually a question for semi-variable. And the second highlight of this question is how we calculate the units. Clear? As per the capacity given. So be very, very careful. If the capacity is per annum, first split between the months it is given, 3 or 9 months, and then calculate 50 or 80%. Clear? Don't calculate 50 or 80% directly from 1,20,000 per annum. It's per annum. You have to split between months first. Clear? So 337.35 is your average selling price. That is the final answer. Okay, we have the fair solution also. Please take a look at the fair solution. This is the capacity utilization. Okay, so 1,20,000 into 3 by 12 and then 50%. 120 into 9 by 12, then 50. Then it has to be 80%. It is 80%. Clear? It was 80%. So this is how we have calculated. So this was the direct material and then total, direct labor and then total, fixed overheads as per the time. So for 3 months and for 9 months. Clear? And this as per units. So semi-variable, 20 lakh for the 50%. So we have taken for 3 months and 28 lakh for 9 months. So it has come to this. This is the total sales divided by 87,000. You will get 337.35. All right. Take a note of this solution. Students will take a break here for 5-7 minutes. So we'll come back after the break. Till then, you just pair this question. You can just revise this question again, and we'll be moving to the batch costing after the break. Welcome back, students. So let's continue with the unit and batch costing. We have done a part of unit costing. So let's move to batch costing. So let's continue with batch costing. So batch costing is a type of specific order costing where articles are manufactured in predetermined lots known as batch. So see, batch of students. So there are 100 students in a batch, or let us say there are 1 lakh students doing CA. So they are in one batch. So the result of one batch will be declared together. So batch means a group. All right. So in some organizations, in some products, the output is produced in a batch. The best example of batch costing is pharmaceutical industry, medicines. So if you just buy a strip of medicine, for example, crocin, and if you ever observe that when you buy that medicine, in the invoice, the chemist always mentions batch number. That means this medicine was produced in that particular batch number. So the identity of that medicine is its batch number. Clear? So let us say the batch number 1, 2, 3. So that medicine was produced in as part of that batch. So maybe that in that batch 1 lakh strips of crocin was produced. So the identity of every 1 lakh strip is the batch number. Yeah. So they are produced together. All right. So batch costing is particularly used in pharmaceuticals, or if they are used in, let us say, food products. So 1 lakh fruity packets are together produced in one batch. Or they are used in, for example, the parts of bicycle or parts of a motor car. So the small parts, they are produced together. So 1,000 parts of bicycle are produced together in one lot. So whatever is produced in one lot is called as one batch. And the cost of that per batch you have to calculate. Clear? So for example, it's unit. So unit is, it's 1 unit. And then it's batch. So batch size could be 1,000 units. Clear? So in unit costing, we calculated the cost per unit, but here we will be calculating cost per batch. Cost per batch means total cost divided by total units in the batch. So if the total cost is, total cost is 5,000, and the total units in the batch is 1,000. So cost per batch is 5 rupees. Yeah. So cost per batch means per 1,000 units. Yeah. So this is how we calculate the batch costing. Okay. So we have this illustration and the batch costing. Let's take a note of this illustration, please. So this company owns a bakery, which is used to make bakery items like pastries, cakes, and muffins. And it used to bake at most 50 units of any item at a time. That means, so 50 units are one batch. Clear? Or that means one lot. So in one lot, how many items will be baked? 50 units. Clear? So per batch, how many units per batch? 50 units. 50 units will be manufactured together in one lot, in one batch. Clear? A customer has given order for 600 muffins. Muffins, you understand? Muffins is cake. All right, it's one form of a cake. To process a batch of 50 muffins, the following cost will be incurred. So this is the cost per batch. Cost per batch of 50 units. Clear? So whatever is given to you, so 500 material cost is the cost per batch of 50 muffins. That means 500 is the cost to manufacture 50 muffins. It's not the cost to manufacture one muffin, but 50 muffins. That means you have been given the cost per batch. All right. Material cost per batch, wages cost per batch, oven setup cost per batch. And you have got an order for 600 muffins. So how many batches you have to make? All right. Can you tell me how many batches? If in one batch, you can produce 50 units maximum. That means in one lot, 50 muffins can be produced. Maximum 50 muffins in one lot, in one batch. And you have got the order for 600 muffins. So how many batches you have to run? How many lots you have to run? Can you tell me? Very good, 12. So if in one batch 50 muffins can be produced, you have to manufacture 600 muffins you have to bake and 50 muffins in one batch. So 12 batches you have to run. 12 batches means 12 lots you have to run. Clear? So this is the meaning of batch. One batch means one lot. How many units will be baked or produced in one lot together? Clear? Absorbs, so it absorbs production overheads at the rate of 20% of direct wages cost. See, in every question you will find the different elements of cost. You will have material also, you will have labor also, you will have overheads also, and overheads are absorbed. Clear? So material cost is there, wages is there, setup cost is there, and you can absorb production overheads at 20% of direct wages cost. 10% is added to total production cost of each batch to allow for selling, distribution, and administration. So they are also absorbed on the basis of 10% of production cost. So all the overheads are absorbed. Clear? After that, you have to add a profit margin of 25% of sales value. Determine the selling price for 600 muffins. You have to calculate the selling price for 600 muffins. So let's just start. I'm erasing all the extra things so that let's start with. So please prepare a statement of calculation of selling price for 600 muffins, right? So 600 muffins, that means you have to calculate simultaneously per batch also. All right. So here it will be total cost and it will be cost per batch. Here. So cost per batch means 50 units. In one unit, in one batch, how many units are there? 600. So cost per batch is there, and yes, the total cost is there. Total cost will be for 600. So cost per batch, you can also calculate cost per unit also. Clear? So you can make cost per batch and then cost per unit. So let's start with direct material first. Start the question, please. So cost per batch you have to calculate, and batch is for one batch includes 50 units. And then total cost will be for 600 units. Clear? Because we have to calculate the selling price for 600. Selling price means total cost plus profit and reach up to sales. So we have to make the entire format starting from direct material. 500 per batch. So 500 is the cost of per batch. Can you tell me direct material cost for 600 muffins? Yes, 12 batches. Very good. So 12 batches. Can you calculate the total cost, total material cost for 600 muffins? Cost for one batch is 500. Direct material cost for one batch is 500. Can you calculate for 600 units? Yes, it comes to 6,000. How? You see, two ways you can do. So 500 into 600 divided by 50, because 500 is the cost for 50 units and you have to calculate for 600, or you have calculated 12 batches. Here you have to run 12 batches, 12 lots. So cost per batch is 500. So you can do the other way around also. You can do 500 into 12. It will also come to 6,000 and it will also come to 6,000. So you can do any which ways. You know there are 12 batches to run. In one batch, 50 units. So how many batches to produce 600 units? 12 batches, and 500 is the cost for one batch. So 500 into 12 also you can do 12 batches. Clear? Or you can do 500 into 600 divided by 50. So any which ways you can calculate. I hope students you are understanding what I'm trying to explain. Okay. So let's proceed with the question. Calculate the direct labor cost now. 50 is per batch. Direct labor 50 is per batch. So you can do 12 into 50, or you can do 50 into 600 divided by 50. It will come out to 600. Direct labor is 600. Students, I hope you have understood. Direct labor is 600. All right. Then oven setup cost, oven cost 150 per batch. Oven cost is 150 per batch, so it comes to 1800. All right. Then you can add overheads, production overheads. Add production overheads, 20% of direct wages cost. So it comes to 120. Keep on calculating cost per batch also. How much is the oven production overheads per batch? How much is the production overhead cost per batch? Yes, oven is 1800, so it comes to 150. Production overheads, 20% of wages cost. Wages is 600, so 20 is 120. Production overhead is 120. Can you calculate production overhead cost per batch? How much is this per batch? Calculate production overhead per batch. Come on. See, this will clear your concepts, how to calculate both ways. So production overhead is 20% of wages cost. Can you calculate production overheads per batch? How much is per batch? Production overhead per batch. It has to be 10. Clear? Production overheads per batch. You have to calculate simultaneously cost per batch also. Okay. So how you have calculated? 120 is the cost for 600. How much has to be the cost for 50 units? So 120 into 50 divided by 600. You will get 10. Yes. It's not 1. I don't know what Kiran has written. It's 10. Yes. Production overheads is 10 per batch. So that has to be the total cost. Calculate the total production cost. Calculate the total production cost. It is 8520. 8520. It will be 710. Production cost, total production cost. Total production cost is 8520. And production cost per batch of 50 units is 710. Students, any doubts so far? Production cost is 8520 and production cost per batch is 710. Now, what you have to do now, 10% you have to add for selling and distribution. Add selling and distribution and administration. 10% of production cost, 852 and 71. 852 and 71. So you will get the total cost. Total cost. Can I get the total cost? 8520 plus 852. It's 9372. 710 plus 71 is 781. We have calculated the total cost 9372 and 781. See, we are simultaneously calculating the cost per batch also. It's a batch costing. You have to calculate cost per batch. Profit is 25% of sales, but you have to calculate on cost. So add profit. 9372. Profit comes to 3124. Profit comes to 3124 and per batch is 260.33. Profit is 3124. Yes, profit is 3124. So now how much is the selling price? The sales is come. There's a time to calculate the sales now. 9372. 12496 has to be the sales. And 1041.33 should be the selling price. This is your final answer. Clear? So we have simultaneously calculated cost per batch, selling price per batch. So you have to calculate this and selling price for 600 units. So this is for per batch. Clear? 1041.33 is for one batch. Here, per unit will be divided by 50. It's 20.83 per unit. See, we have calculated the selling price both ways. Selling price per batch of 50 muffins will be 1041 and selling price per muffin for one muffin. So 1041.33 divided by 50 muffins. 50 muffins. Clear? Is equal to 20.83 per unit. So the selling price for one muffin is 20.83 and the selling price for one batch of muffin of 50 muffins is 1041.33 and the total sales for 600 muffins is 12496. So I hope students you have understood this. So selling price per batch, selling price per unit and total sales for 600 muffins. All the three answers are before you. I hope you have understood this. Any doubts in this question? Any doubts in this question, students? Okay, so just complete the wind up this question quickly. Let us see if there is, okay, so there is a fair solution also given in this slide. So you can just check. This is the total cost per batch, total selling price, total cost per batch and per unit. So this is per muffin. Okay, and this is for 50 muffins. 50 muffins means one batch. Okay, so students, I hope you have understood. Good. Take note of the fair solution. So we are, whatever question we are doing in unit and batch costing, we are following all the elements of cost. We have to take all the elements of cost. Okay, moving further. Okay, we have another question. So very similar question which we have done, but still we can quickly just understand this question. So this company undertakes to supply 1000 units of a component per month. For the month of January, February and March, every month a batch order is opened against which material and labor are booked at actual. They are booked at actual, not per unit, but actual. Overheads are levied as a rate of per labor hour. So overheads are absorbed on the basis of labor hour. Students, you have to understand the question properly. Only then you will understand how we have to approach the question and what we have to follow. Clear? So whatever is given, you have to understand what all information is given. So material and labor are booked at actual cost, not on the basis of per unit. Overheads are absorbed at the basis of per labor hour. Selling price is 15 per unit. So they have given us selling price. Calculate the profit per unit of each batch. Profit per unit means you have to calculate again total cost, material, labor, and overheads, which I see here. There are three elements of cost in this question again: material, labor, and overheads. You have to calculate the profit per unit of each batch which is given. So this is the batch, and you have to calculate the profit for all the three batches and the overall position of the order for 3,000 units also. Clear? So first you have to calculate the profit per unit of all these three batches of January, February, and March. And then you have to apply the information for 3,000 units separately. So material cost, we know the actual. Labor cost, we know the actual. Overheads, we have to absorb. Clear? So we have to calculate the profit for 1250, for 1500, and for okay, so 1500 and for 1000. You have to calculate the profit. So these are the units. Units per batch. You have to calculate profit per unit of the batch. All right. So again, material and labor. So you can start with material first. All right. So material you can write. Material actual cost you have 6250, 9,000 and 5,000. Material is actual cost. It's given in the question. Labor also actual is given in the question. 2,500, 3,000 and 2,000. We have to calculate profit per unit. So for profit per unit, we should have the cost per unit and the selling price per unit, which we have. All right. So labor. Now coming to overheads. Good. Now coming to overheads. Overheads are absorbed. Material and labor were the actual cost given. Overheads are absorbed on the basis of labor hours. So first let us calculate the overhead rate. Overhead rate per month. For every month, it has to be a different overhead rate. Overheads divided by hours. So 3 per hour for the first month, January. Overhead rate, absorption rate, 3 per hour for January. 9,000 divided by 4,500. 2 per hour for February. We have to calculate absorption rate per hour of overheads. March. Again, 3 per hour for March. Okay, so 3, 2, and again 3. So these are the rate per hour. Now we have to absorb the overheads. Rate per hour is there. Now, so 3 into hours for February, 2 into number of hours, and for March, 3 into number of hours. Where are the number of hours? Can we find the number of hours from anywhere? We need the hours for this batch. See, the total hours for the entire organization, 4,000, 4,500, 5,000. This is for the entire organization. How much labor hours are used for this particular batch for January, February, and March? How much is for this particular batch? How you have to calculate? See, labor rate per hour is given here, 2 per hour. Labor cost is given to us. So cost divided by per hour rate, 2 per hour, you will get the hours. Clear? So 1250 hours for January divided by 2 per hour. 1,500 hours for February divided by 2 per hour. 1,000 hours for March. All right. So this is the information where you can calculate the labor hours used for this particular batch of January, February, and March. Yeah. So 2,500 labor cost, They have been paid 2 per hour, so they must have worked for 1250. See, 4,000 is for the entire organization in January. Out of 4,000, 1250 hours were used to produce 1250 units in this particular batch. Clear? So 1250 hours for January must have been used. Cost is 3,000 for February, 2 per hour, 1,500 hours must have been used. And for March, 1,000 hours must have been used. So you can calculate the overheads. So this is the overheads. All right. So this is how we calculate the overheads. Can you calculate the overheads, please? So it is 3,750. It comes to 3,000 and it comes to 3,000. So you have the material, you have the labor, you have the overheads. Can you calculate the total cost? Total cost. So this was the working part. So 6250, 2,500 and 3,750. Can you calculate the total cost? Let me calculate it for you. 12,500 total cost for January. 15,000 total cost for February, 5, 6, 7, and 10,000 the total cost for March. All right. So these are the total costs. Now cost per unit. Cost per unit. You have the per units. 12,500 divided by 1250. 15,000 divided by 1,500. 10,000 divided by 1,000. These are the units. Clear? Total cost we have calculated. Total units we have. So we have the cost per unit 10, 10 and 10. Cost per unit for all the 3 months coming to 10, 10 and 10. Clear? Selling price is, it's given in the question, selling price is 15 per unit. So selling price 15 per unit. Selling price 15, 15 and 15. So profit per unit is 5. Profit per unit is 5, 5 and 5. You have to calculate the profit per unit. Just see the solution once. So we started with units. Yes, we started with units. Then we calculated the material cost, labor cost, which was actual and given in the question. Overheads we absorbed on the basis of labor hours. So highlight of this question was how you calculate the overheads. Clear? So as per the given information, total labor hours and total overheads for the entire organization was given. We have calculated the absorption rate here. So this is the absorption rate. For absorption rate, we need the hours. So hours we have calculated with the help of 2 per hour, the labor rate per hour, and the labor cost was given. So we have calculated the hours, we have the rate, we have the hours, so we have absorbed the overheads. So these are the absorbed overheads, these are absorbed overheads. Okay, with the help of absorbed overhead, now we have calculated total cost, total units we had for January, February and March. And we have calculated the cost per unit, which came out to 10, 10 and 10. Selling price per unit, we had 15. It's given in the question. So profit per unit is 5. Profit per unit is 5. So this is the fair solution. See, this is the profit per unit, which is 5. Always do the total also, always. Whenever you do any solution, you should have the total. All right. So we have the total profit, we have the total cost, we have the total sales also and per unit also. All right. So now what they're asking us, we have calculated the first part of the solution. Now you have to calculate overall position of 3,000 units. 3,000 units they are telling us to calculate the overall position. All right. So overall means sales. Selling price is 15 into 3,000. So sales is 45,000. You have to calculate overall position. All right. Not the breakup. You have to calculate the overall position. So selling price is 15 into 3,000. So it comes to 45,000 is selling price. minus cost is 10 per unit into 3,000. It comes to 30,000. So this is the cost and then the profit. So profit per unit is 5 into 3,000. The profit comes to 15,000. So see, the profit is 5 per unit, otherwise also. So this is the overall position for 3,000 units, which they have asked to calculate. So overall sales for 3,000 is 45,000. Overall cost 10 per unit, so 30,000. Overall profit 5 per unit, so 15,000 is the profit. The students have a look at the final answer. Students, the questions are very, very conceptual. You should have the understanding of different elements of cost. And over and above that, the most important is what all is given in the question. You have to mold your answer accordingly. What is required in the question? Accordingly, you have to frame your answer. Okay. So I hope you have taken the note of this. Okay, so this is overall position also. Same way we have done. Selling price per unit is 15. Cost per unit is 10. And profit per unit is also 5 per unit. So this is the overall position for 3,000 units in total. They're asking the overall. That means you don't have to show the breakup. It's just you just apply the per unit to calculate the total sales, total cost, and total profit. So students, any doubt in this question before we move further? All right. So let's move to the last segment of the session, which is economic batch quantity. Students, this is very similar to economic order quantity you did in material. So in material, economic order quantity means how much to be produced in one order. Clear? How many units to be purchased? Economic order quantity means how much units to be purchased, how much units of raw material to be purchased in one order, in one lot. All right. So that the ordering cost and the storage cost should be the minimum. Similarly, economic batch quantity tells you how much units to be produced in one batch. 1,000 or 1 lakh or 10,000. How much units you should manufacture in one lot, in one batch. So if I talk about the strip of kerosene, so how many strips of kerosene should be produced in one lot together? 1,000 strips or 100 strips or 1 lakh strips. Why it is important to know? Because the total cost, see, whenever we are talking about batch quantity, all right, there will be two variants of cost here. The setup cost, you have to set up the entire process accordingly. So the setup cost and of course the storage cost, because the inventory holding cost has to be there. For example, you are producing 1,000 units in one lot. You have to have the storage space also to keep all those 1,000 units. So the storage cost will also be there. So economic batch quantity tells you there are two variants of cost. If you run the batches, one is the setup cost of the machine or the entire process, and second, the inventory holding cost. So inventory holding cost is exactly the same like you have done in the material cost. Clear? So what happens in batch costing basically? See, first raw material is gathered. So let us say we have to manufacture 1,000 units together. So raw material for 1,000 units will be gathered first. And then together they will go to process. Clear? So first raw material for 1,000 units will be assembled. All the raw material for 1,000 units will be assembled first. And together then they will process. Clear? It's not that we have to, induce the raw material of one unit one at a time. No, you have to assemble the raw material for 1,000 units. If you are producing 1,000 units together, so you have to input the 1,000 units raw material together first, assemble it first, and then the entire raw material for 1,000 units will go together into the process, not one by one. This is batch costing. So how many units to be produced in one lot in one batch is very, very important to know, because you have to make the setup accordingly. If you decide to produce 1000 units together, you have to have that setup. Your machine should have the capacity to produce 1000 units together. If your machine does not have that capacity, then you cannot produce. So if you have to produce 1000 units, because the total cost will be minimum, so you should buy that particular type of machine so that you can produce 1000 units, which has told you by economic batch quantity. So economic batch quantity will tell you how many units to be produced in one batch, in one lot, how many units you should produce, because that will give your machine setup and inventory handling cost. The cost will be minimum. When you produce economic batch quantity, the total cost of inventory and setup will be minimum. Clear? So the same concept of material inventory handling cost also. So if the size is higher, the setup cost may decline, but the units and inventory will go up. All right. So we'll understand once we do the question. So economic batch quantity is the size of a batch where total cost of setup and holding costs are minimum. Clear? So let us understand. Okay, so we have this. It's a very, very same way the way you used to calculate economic order quantity. Similarly, it's for economic batch quantity. Economic batch quantity is equal to 2 into D. D is the annual demand for this product. In raw material, it was annual consumption of raw material. Here, it is the annual demand for the product. S is the setup cost per batch, the machine setup cost per batch. Here, so whatever is the setup cost per batch, that is S. C is the carrying cost per unit per annum. It's always per unit per annum. So what is the carrying cost of one unit throughout the year? So carrying cost is always per unit per annum, per unit per annum. Clear? And setup cost is always per order or per batch. So that will give you economic batch quantity. The answer will be in units, not in rupees. Remember, clear? Because this is how much quantity to be produced. So answer will be in units. Okay, so we have one illustration also. So this is the way we have calculated. 500 units. The monthly demand is 500. We have to have the annual demand. You have to be very, very careful. So 500 into 12. 6,000 is the annual demand. You have to take the annual demand. Setup cost is 60 per batch. 60. Setup cost is 60 per run, per batch. And storage cost or the inventory handling cost is per unit per annum. Per unit and per annum. So it will be 10% of 20. So it will be 2 rupees. 2 rupees per unit per annum. That means if I store 1 unit for the entire year, the cost will be rupees 2 per unit per annum. I'm repeating. Storage cost is per unit per annum. What does this mean? That means if I store 1 unit throughout the year, what will be the carrying cost or storage cost of that particular 1 unit? So it's per unit per annum. So 2 rupees will be the storage cost for 1 unit if it is stored throughout the year. So 600 units you have to produce, you should produce in one batch. Clear? That tells you by economic batch quantity. So you have to produce 600 units in one lot, in one batch. Clear? So that is economic batch quantity. Okay, so we have this one illustration. Take a note of this illustration, please. So students, can you calculate the optimum run size? Optimum run size means economic batch quantity. If optimum run size means how many units should be run in one lot. So economic batch quantity. Can you tell me economic batch quantity How much units should be run in one batch? All the information is given to you. Can I get EBQ? Economic batch quantity, how many bearings? So it's committed to supply 48,000 bearings per annum. ₹1 inventory holding cost per bearing per month. I've explained you what does that mean. So do it very carefully. Setup cost per run means per batch. So per batch, per run, per lot. It's same. Don't get confused. So setup cost per run means per batch is 3,200. Can I get the answer for economic batch quantity? Come on, students. I hope you are working on it. Economic batch quantity. It should have been calculated by now. Are you able to do it? Any answers? 5060. Okay, 2 students have come up with the answer. Any other answer, or should we take this as the answer? So let us see how it should be. 2 is a fixed multiple. Annual bearings, annual. So it's already annual given in the question. Setup cost per run, 3,200 is the setup cost per run. Divided by inventory cost per unit per annum. Inventory cost per bearing per month is given. You have to calculate per annum. Be very careful. It's given as per month. You have to convert it into per annum. Its inventory cost per month is given. You have to calculate per annum. So it should be okay. 5060 approximately. That means you have rounded off the answer. So that's fine. 5060 bearings. So what does this mean? 5060 bearings should be produced in one batch, in one run, in one lot. Clear? So 5060 bearings should be produced together in one batch. That is economic batch quantity. What would be the interval between 2 consecutive runs? First, you should know how much are the total runs we should take. If in one run 5060 bearings are produced, how much runs, how much batches we have to run? 5060 bearings in one batch. How much batches you would require? We have 48,000 bearings we have to produce throughout the year. In one batch, 5060 bearings are produced. So how many runs? 48,000 divided by 5060. It comes to 9.48, or you can say 10 runs. 10 runs or 10 batches. You have to run 10 batches approximately to produce 48,000 bearings. I'm repeating, in one batch, 5060 bearings are produced. You have to produce 48,000 bearings in the entire year. So how many batches you have to run? 48,000 divided by 5060 bearings. The answer is 9.48 or 10 runs. You cannot run in fraction. So you have to, yes. So 98, it's not 98. It's 9.48 or 10 runs. You have to have 10 runs. So now concentrate on the second part of the question. What would be the interval between 2 consecutive runs? What is the interval between 2 consecutive runs? So total runs are 10. We have to run 10 batches throughout the year. So 365 days, and you have to run 10 runs. So how much is the time interval between 2 runs? 36.5 days. So 36.5 days is the interval, the gap between 2 batches. Clear? One batch, let us say on 1st January, one batch. After 36.5 days, the second batch will start of 5060 bearings. Then after 36.5 days, the next batch will start. So the interval or the difference or the gap between 2 batches will be 36.5 days. Clear? So this is how we do it. First of all, the first step is to calculate economic batch quantity. The step is to, you should know how many batches you have to run in one year. So the number of batches you have to run are 10 batches to produce 48,000. One batch you can produce 5,060 runs, 60 bearings. And the third part is, what would be the interval between two runs? So 10 runs will be done in the entire year, 365 days, because they're asking you what is the interval. So 365 days divided by 10 runs. So the gap between two batches, two runs, will be 36.5 days. So I hope point number 1 and 2 are clear to you. Find out the minimum inventory holding cost. Minimum inventory holding cost. Clear? You must have done this in material also. How we calculate inventory holding cost? Inventory holding cost. I'm just making you revise. Inventory holding cost is carrying cost, or the inventory cost, carrying cost per unit per annum. Carrying cost per unit per annum into half of EBQ, or half of EOQ we used to do. Carrying cost per unit per annum is nothing but 12. We know that it is 12. Carrying cost per unit per annum, 1 into 12 is 12. So carrying cost per unit per annum is 12 into half of EOQ. 5060 is your EBQ. So 5060 divided by 2. That means we assume that half of this EBQ will be there in the stock throughout the year. Half of this. So we take as average. Average we take as divided by 2. So 2530 into 12. So 30360 should be the inventory holding cost, which should be minimum. So inventory holding cost, when we follow EBQ, comes to be minimum. Clear? So this is the way we calculate. Yes, the same concept is carried forward as we have done in EOQ. So inventory holding cost is carrying cost per unit per annum into half of EBQ. So half of EBQ is 5060, half of EBQ is 2530 into carrying cost per unit per annum, 30360. I hope students have understood. So all the three parts we have done. Optimum run size, which we call as EBQ, interval between two consecutive runs, and the minimum holding cost. Clear? So any doubts in this question so far? Okay, we have the fair answer also. You can just do it, please. Have a take note of the clear answer. So this is, we have calculated EBQ. This is the number of runs. This is the interval between two runs. And the minimum, half of EOQ into carrying cost per unit per annum. So this is the final answer. So we have all the answers. Take a note of the fair answer. Shall we move on? All right. Okay, so just take a note of this question. It's also based on EBQ. So this company manufactures stent. Stent actually is, when your heart is blocked, the arteries are blocked. So they insert stent to open the arteries of the heart. Clear? That is used by hospitals in angioplasty. The process of inserting the stents in the arteries is called angioplasty, a procedure to use open blocked coronary arteries without open heart surgery. So without doing the open heart surgery or the bypass surgery, we do angioplasty, the doctors do. Good. So there will be a demand of 1 crore stents in the coming year. So that means annual demand is given. This company is having a market share of 10% of the total market demand. It is estimated that it costs 3 rupees as inventory holding cost per stent per month. Be careful. Setup cost per run is per batch, is 450. Optimum run size. Can you calculate optimum run size, which is nothing but EBQ? So they're asking how many stents should be manufactured in one lot, in one batch. All right. how many stents should be manufactured in one batch, in one lot, optimum run size. So we have all the information. Please calculate EBQ for this answer. You have the information in the second paragraph. I want the answer for EBQ. Come on. Let me have the EBQ from your side. And then we will calculate minimum inventory holding cost. First, calculate economic batch quantity. How many stents should be produced in one batch? Come on. By now, you should be thorough. 2 is a fixed multiple. Can you tell me the annual demand? Come on, students, you should be very quick in this. We have made you understood the concept. We have done a couple of questions on this. Now you should be very, very quick in calculating EBQ. Can I have EBQ from your side? How much is the demand I should take? Be very careful. It's 1 crore. Be very careful of the zeros, okay? Can you tell me the annual demand? No answers? Should I calculate then? EBQ, I should have got the answer by now. No answers? All right. So the entire market demand for 1 year is 1 crore. What is the market demand for this company? So this company has 10% of the total market demand. So 10% of 1 crore is the market demand for 1 year for this particular company. 1 crore, 10% comes to 10 lakh. 10 lakh is the annual market demand for this company. 1 crore is the entire market demand. For this company, it's 10% of the entire market demand into how much is the setup cost per run? It's 450 divided by inventory holding cost per unit per annum you want. And in the question, it's given per unit per month. Multiply by 12. It's always per unit per annum. Per unit per annum. All right. Okay, so now I've got the answers. Is 5,000 stents. 5,000 stents, that means in one batch, 5,000 stents should be produced. In one batch, together 5,000 stents in one lot should be manufactured. Clear? You should know the inventory holding cost. So second question is inventory holding cost. So I just told you inventory holding cost. Inventory carrying cost per unit per annum is 3 into 12, 36. 3 into 12. So carrying cost per unit per annum is 36 into half of EBQ. EBQ is 5,000. The optimum run is 5,000. So into 2,500. So 2,500 into 36. 90,000 is minimum inventory holding cost. 90,000 is the minimum inventory holding cost. We have just done in the previous question. Inventory holding cost, how we calculate? Inventory holding cost per unit per annum into half of EBQ. EBQ is 5,000. So half of EBQ is 2,500 stents. So the total inventory holding cost is 90,000. It's 90,000. Yes. Let's move to the third part of the question. This we have done. This we have done. Assuming that the company has a policy of manufacturing 6,000 stents per run. So they say we have the policy to produce 6,000 stents. We will not follow economic batch quantity of 5,000. Economic batch quantity is telling you should produce 5,000 stents. But this company is saying, no, we have the policy of producing 6,000 stents. We will not produce 5,000 stents. So, and we claim that if you produce 5,000 stents, the inventory holding cost will be minimum. So now they are saying the company has a policy of producing 6,000 stents. How much extra cost the company would be incurring as compared to the one above? So we have the as per economic batch quantity The minimum holding cost is 90,000. Clear? Let us see how much is the holding quantity for 6,000. Clear? So total cost now. See, students, total cost is basically the setup cost and the inventory cost. There are two types of cost when we run the batch quantity. So two types of cost are there. Inventory cost, we know how we calculate inventory cost. So carrying cost per unit per annum. Clear? So this we have calculated 90,000. Setup cost is number of runs or number of batches into cost per run. All right. So setup cost if we are taking 5,000 and the cost if we are taking 6,000. Let us calculate the total cost. So the total cost will be setup cost and inventory cost together. If we are following 5,000 economic batch quantity, how much it will be the total setup cost? So how much total runs? If 5,000 stands in one run, how much runs will be taking when the annual demand is 10 lakh? So 10 lakh divided by 5,000, 200 runs. 200 batches we have to run if we produce 5,000 stents in one batch. 200 runs or 200 batches into cost per run is 450. Cost per run is 450. So how much is the setup cost? 90,000. And inventory holding cost, we also have calculated 90,000. Students, remember, whenever at EBQ, economic batch quantity, the setup cost and the inventory cost will be equal. Clear? That means you have calculated it correct. The answer should be, if it's approximate answer, then it might be slightly different. But otherwise, the setup cost and inventory holding cost will be equal if you calculate for economic batch quantity. I'm repeating. At economic batch quantity, the setup cost and the inventory cost will be equal. And the total cost will be minimum. So 1,80,000 will be the minimum total cost. Let us see for 6,000. If we produce 6,000 in one lot, how many lots we have to produce? So 10 lakh is the annual demand divided by 6,000. 166.66 runs we have to take. 10 lakh divided by 6,000, 166.66 something we have to take into 450. So it will be 75,000. 75,000 will be the setup cost when we produce 6,000 stents in one lot as per the company's policy. Inventory carrying cost, 36 into half of EOQ and half of EBQ. EBQ is 6,000, so half is 3,000. So 3,000 into 36, it will be 1,08,000. So if we are following 6,000, the total cost will be 1,83,000. So the extra cost you will come up will be 3,000 extra. Clear? So I'm repeating the whole question. All right. So this is the total cost. Students, whenever the question is asking you extra cost, you should always calculate the total cost. Total cost means setup cost and inventory holding cost. I'm repeating. Whenever the question asks you as one part, how much will be the extra cost if we are producing whatever number of units other than EBQ, you should always frame your answer with respect of total cost. Total cost is made up of setup cost and inventory holding cost. Setup cost means how much setups or runs or batches you have to run. So if in EBQ, in one batch, 5,000 units, how many batches we have to run to produce 10 lakh units, 10 lakh stents? The annual demand was 10 lakh, right? The annual demand was 10 lakh here. So 10 lakh was the annual demand divided by 5,000. So 200 runs we have to use. Runs means batches. Clear? 200 batches we have to run and cost per batch is 450. So 90,000 is the batch cost or the setup cost. Inventory carrying cost, I've told you, carrying cost per unit per annum into half of EBQ. Into half of EBQ, it will come to 90,000. And I told you at EBQ, the setup cost and inventory cost will be equal. All right. Now, if we have calculated for 6,000 units, so the company is not following EBQ, the company is following 6,000 units. So how many runs, how many batches we have to do? So 10 lakh divided by 6,000, it will come to 16.6666 runs or batches into 450 per batch. So the setup cost comes to 75,000. Inventory carrying cost is 1,08,000. So the total cost for 6,000 is 183. The total cost for 5,000, which is EBQ, will always be minimum, which is 180. So if you will manufacture 6,000 units in one batch, you have to incur extra cost of 3,000. All right. So students, I hope you have understood. This is exactly the same lines as EOQ. Clear? So moving further, we have just take a note of this, the fair solution. So this was the EBQ, which we have calculated. 1 crore was the market demand. This was the market demand. And this was the annual demand of company. Okay, 10 lakhs. Annual demand of company is 10 lakhs. So we have to take this 10 lakh. So this is EBQ. Inventory holding cost minimum is 90,000. So extra cost, whenever you have to calculate, you should always take total cost, setup cost and the carrying cost. So total cost this when 6,000 and total cost this when you're following EBQ. And when you follow EBQ, the setup cost and inventory cost will always be equal. But the amount should be in wholesome figure, not approximate. If you're taking approximate, then there will be, some difference. All right. So this is the extra cost you have to take. So remember, whenever you have to calculate extra cost, please calculate for setup and carrying cost together and not the extra cost only for minimum inventory holding cost. No, you should calculate for both. Clear? I hope you have understood how we have calculated setup cost also. Number of runs, number of batches into cost per batch. Okay. All right. So I think this should be the last illustration for the session. Just take a note of this session. This is again, you have to calculate it's a good practice question. You have to calculate the selling price per unit. Just see what you have to calculate and then understand the question. So you have to calculate the selling price per unit. Now approach the question in that manner. For selling price per unit, what should you have? You should have the total cost. Then the total cost will be made up of all the elements of cost, material, labor, overheads. Then the total cost, then the profit is there, and you will have the total sales, units you have, selling price per unit. All right. So this is how you have to approach the question. So first, just you have to see what is the question asking from you. Accordingly, we have to understand how we have to approach the question. Yeah. Now just take a note of this question. Units produced are 1,000. So first of all, the top of it, you have to write the units, 1,000 units. Selling price per unit of batch. So you should have the total cost and the amount also. All right. Material cost. So let's start with material. Let us see how it goes. Material is 2 lakh. Direct labor. There are two departments, A and B. So direct labor, I think you can calculate direct labor. Direct material is already given. Its actual material cost 2 lakh. Units are 1,000. So all the elements of cost we have to take. Direct labor for department A, it comes to 80,000. 800 into 100. So labor hours we have. Department B, 1,400 into 120. 1,68,000 is your direct labor cost for both the departments. Clear? Then you have factory overheads. Factory overheads are absorbed on labor hour basis. Factory overheads are absorbed on labor hour basis and the rates. So factory overheads again for A and B, the rates are given to you. And where are the hours? These are the hours. They are absorbed on the basis of labor hours, and we have been given labor hours for department A and B both. So 140 into 800 hours, it's given. For department B, 80 per hour into 1400 hours is given. So factory overheads are absorbed on the basis of labor hours. Labor hours are given to you, and factory overhead absorption rate is also given to you. Can you tell me the factory overheads for A and B? Factory overheads for A and B. So 140 into 800. It comes to 1,12,000 and 1400 into 80. So I'm calculating for you. Again 1,12,000. I hope it's correct. 140 into 800 and 80 into 1400. Okay, so these are the factory overheads you have got. Clear? Yes, 1,12,000 for each. Okay, so factory overheads we have direct material, we have direct labor, we have factory overheads. Administrative overheads are absorbed at 10% of selling price. Administrative overheads, 10% of selling price. First, let us do the total of this. So administrative overheads are 10% of selling price. That means it's not part of cost of production. It's on selling price. So this should be the total cost. So just calculate the factory cost or production cost. Can I have the total, please? Let me do the total. 2 lakh plus 80,000 plus 168,000 plus 1,12,000 plus 1,12,000. 672,000 is the total cost, right? Administrative overheads are 10% of selling price. We don't know selling price. The firm expects 25% gross profit. What is gross profit? Sales value minus factory cost. Sales value minus factory cost. That means this cost. So gross profit is 25% of production cost or the factory cost. Clear? Gross profit is sales value minus factory cost. We have got the factory cost, production cost. Administrative overheads are part of selling price. So it's not part of production cost. Clear? So 25% gross profit. That means 6,72,000 should be 75%. 6,72,000 has to be 75%. So administrative overheads we don't know, but the total cost we know. And then we can add the profit, which again we don't know. But we know the sales. Sales is 100% of this production cost. So gross profit is 25% of sales. And we have the total production cost. Clear? So 6,72,000, that means it's 75%. 6,72,000 into 100 divided by 75. 8,96,000 has to be the sales. Students, it's very, very important. So the highlight of this question is we have the production cost. They have given us gross profit. 25% is gross profit. Gross profit is sales minus factory cost. So that means this factory cost, production cost is 75%. All right, because gross profit is 25% and 100% has to be sales. So can't we calculate 100%? We have calculated the sales. If we have calculated the sales, now can't we calculate administration overheads? It's 10% of selling price. Administration overheads are 89,600. 10% of sales. Administration overheads. So you have to go bottom to top. All right. So administration overheads are 89,600, which is 10% of sales. So this is very, very important. You have been given gross profit, not net profit. Clear? So 25% is gross profit. Gross profit means cost of production is 6,72,000. Gross profit is always added to cost of production to calculate the sales. So that means 75% is cost of production. We have the cost of production. Through that, we have calculated the sales first. Now we have the total cost. 6,72,000 plus 89,600. 7,61,600 is your total cost minus 896,000. 134,400 is your final net profit. Clear? So this is how this question has to be done. You have to calculate the sales first, and sales will be calculated through gross profit ratio. Okay. So, and the selling price per batch, of course, 8,96,000 is your sales. Divided by 1,000 units, you will get 896 per batch. Selling price per batch is 896 rupees, 896 per batch. Selling price per unit of batch is 896 per batch of 1,000 units. So this is how this question has to be done. I hope you have the solution. Yes, we have the solution also. So this is the material, then the labor, then the factory overheads. This is the factory cost. Administrative are part of selling price on sales. That means administrative overheads are not part of cost of production because they are part of sales. Clear? Cost of production is there, and then the profit we have calculated. First, you have to calculate the sales. So this is how this question has to be approached. So students, that's enough for unit and batch costing. I hope you have got the learnings from it. You must note down the important concepts, important highlights of every question, because in exams, you cannot practice all the questions. So whenever you do the questions, you just note down the important highlight of that question, so that at least you should practice those highlights before the exam. What type of questions can come and how the questions can come. So this way you should approach. All right. So that's all for unit and batch costing. So this is CA Vibha Dhawan signing off for this session. We'll meet in some other session, some other day. So happy studying and happy learning, and all the best to all of you. Thank you and have a good day.